Welcome everybody. Where I'm seeing a lot of people getting into the stream. For the guys that are Zoom already, we have a poll going on asking you some questions about profitability and if you use a bookkeeping service. We're gonna give it 1 more minute and then we're gonna start with the content. I'm gonna start with some questions. I'm super excited. I think this topic, the profitability, it's something that it's becoming more and more obvious that we need to talk about. And I feel in the industry, there is a lot of content around how to launch a better product, how to rank better, or, how to do better PPC campaigns. But at the end of the day, what is very important and to know if our business is profitable or not. Are we making money, or we just moving money, or we're just losing, right? And yeah, today we're gonna talk about some areas. So we can get started. And before we start, I wanna introduce myself for the ones of you that don't know me. My name is Vanesssa Hung. I'm currently a community ambassador at Carbon 6, and I'm very excited because today we're gonna talk about one of the topics that are the most complicated, complex. Sometimes people don't know it. There is a stigma out there of like, yeah, your numbers are not the same as my numbers, and my profitability is not the same as everybody else. And at the end of the day, we are all suffering from the same changes and the same rising costs, and we're still in the same environment. So we can get today to a conclusion of like, what are the areas that we can make better, improve, and to close 2022 in a good way. So then we start 2023 in the best possible setup that we can have for our business. So before we get started, I wanna hear a little bit of you guys, Lee and Nathan. If you can introduce yourself, tell us what is exactly, or why is that you're here in this webinar today. I'm gonna start with Lee.
Yeah, thanks, Vanesssa, for having me. I appreciate it. Great opportunity to talk to people specifically about profitability. I run a business called Seller Investigators. We live in the refund space. If you're not familiar, pretty much every seller on the platform, 3P, FBA seller, suffers in some capacity from what would be kind of leakage or shrinkage if you're in traditional retail. And we help tighten that up. So we basically get money back for people from Amazon that they were unaware, more often than not, that Amazon owed them. So we're a direct link back into profitability.
Thank you so much for being here. What about you, Nathan?
Yeah, so I was a big Amazon seller. I started back in 2008, sold about 25 million from 2008 to 2015, back in the early Wild West days of Amazon, and ended up transitioning into building a freelance marketplace for Amazon sellers called FreeUp. Bookkeeping was a big reason why we were able to make good decisions every month and scale that business, and eventually exit that business in 2019. And when we exited the company and we didn't really know what we wanted to do next, we started consulting with different e-commerce sellers. And the key theme was we couldn't help people make decisions until we could revamp their books and get good data that would help them each and every month. So we decided to launch an e-commerce bookkeeping service called EcomBalance. And with my Amazon business, I was a young entrepreneur. I made every bookkeeping mistake you could possibly make. So we'll kind of discuss a lot of those and help you guys create some good processes to make decisions on going forward.
That's amazing. I'm so excited to hear this conversation. And before we get on the topic, guys, if you have any questions, please put it in the Q&A section. Don't do it in the chat because we're gonna lose them, right? So Q&A, they will get prioritized and I'll ask the questions while we go in the webinar. So Nathan, it was so interesting that you mentioned something about you started back in the day, 2015, and you said like that was the Wild West. And one of the things that I know about those times is that people were talking, we're talking at that moment of crazy profitability numbers of like, yeah, I buy this for $1 and I sell it for 45. That's amazing. And the reality for some people, the majority, is that the rising costs, what happened throughout the pandemic, the shipping, all of it came to lowering that number. So my question to you guys is, how many sellers do you think are under optimized in their profitability? What is the things that they need to pay attention to, and how many, like, is it a common thing? Do you see it every day in your business, Nathan, when you talk to sellers that go into EcomBalance, or Lee, do you see it when they get into Seller Investigators? How big is it, the under optimization of the business?
Yeah, I mean, I think it's a major problem that we have now. I think it starts with a lot of sellers not really understanding their numbers and just going by numbers that are in their bank account, or using a tool and thinking that replaces the income statement and their actual margins. And a lot of it is segmentation too. I mean, back in the day, a lot of sellers were just on Amazon US, and now you've got sellers that are on Amazon Europe. You've got sellers that have different brands and lots of different SKUs. You've got people selling on Shopify and other platforms. So being able to segment and saying, hey, am I spending my time in the right places? Are my margins good across the board, is something you have to be able to do as a business owner. Whereas before, you would kind of get away with just saying, hey, I'm just selling on this one platform with this one SKU and just seeing what money's going to the bank account and make decisions on. It's really hard to make decisions and see what the trends are when you have lots of different products, lots of different brands across different platforms.
Yeah, I mean, I would echo that, Vanesssa. I mean, we live in a different world than Nathan does in the sense of where we look for profitability, but we've got 1,500 or so clients on our platform, and I would tell you that 99.9% of Amazon sellers have leakage in and around their inventory and the space that Seller Investigators lives, normally to the tune of about 1%. So on a, I think it was Vanesssa, you mentioned the crazy margins of the past. Margins have been getting compressed. So, if you're running an Amazon business with a 20% profitability, that's a pretty good little business. We can find you 1%. That's going to translate to 5 points of EBITDA. That's a significant move for most businesses for the amount of lift that it takes to kind of get where we are. But yeah, we find it's a chronic problem across customers.
Yeah, I agree. So in my business, I also see a bunch of sellers that come in and they don't even know, they don't even know that that's happening. They don't even know where the areas that the leakage is going. They don't know where they're losing money. And part of it is because what Nathan said, the ecosystem or the business became more complex, right? There are so many more things, so many programs, so many fees. And by the way, guys, if you're not aware, January is going to hit pretty hard with the FBA fees. A bunch of things are going up drastically. In January 3rd, I think is the first time that we're seeing the change. So you should pay attention. But based on that topic, guys, where are the areas where do you see sellers go wrong? And Nathan, you mentioned the fact of using a software that does some analytics and thinking that's your statement balance. Or Lee, you mentioned part of the shipping, right? But if we want to make a list or prioritize, what are the first areas that I need to look in my business to see if there's things going wrong there?
Yeah, I mean, as a seller, you just have a lot of decisions that you need to make. I mean, what softwares, what tools are you going to use? What agencies or employees are you going to hire? Where are you going to source your products from? Are you going to be able to find cheaper manufacturers? What marketplaces are you going to sell on and spend the time to create listings and all of that? So you have all these decisions to make, and you need to be able to reflect on these decisions on a monthly basis. And I can talk in a bit about kind of my journey as an Amazon seller of doing the books myself and kind of going through that. But the fact of the matter is you have to be revisiting these things on a monthly basis and making decisions based on real numbers. There might be situations where it doesn't make sense to sell a product anymore. It doesn't make sense to be on Amazon Europe, or you need to cut back on softwares or add softwares or hire new employees or hold off hiring. And you need to be able to make those decisions on a monthly basis based on real numbers. And it's a state of constantly evaluating. You mentioned that fees are going up in January. Well, that's going to affect everyone's margins, and you have to figure out how you're going to make up for it. Can your business take that hit, or do you need to cut payroll a little bit or hire VAs instead of US employees. These are all kind of decisions that go through. And as Amazon changes stuff, you have to be able to look at your books and compare them to previous months to make those decisions.
Yeah, I mean, I'd say the same thing Nathan's saying. I mean, the business of selling on Amazon is getting infinitely more complex and more competitive on essentially a daily basis. And, while we live in the refund space, what we try to encourage people is to say, listen, let us do this for you. We're experts at it, and we can give you back your time, i.e., you could do this kind of, you can do refunds yourself the same way you can do everything else yourself. But when you try to be everything in every capacity in your Amazon business, you're going to get too stretched. And, Nathan highlighted, I don't know, 10 or 15 things that need to be done on a monthly basis. That's a lot of ask as, you're running a business to be doing that in addition to everything else. So, what we try to do is simplify the process in our kind of single lane or our kind of narrow lane, where you hand it off to us, you get out of the way, we do a good job for you, and we take one thing off your plate. It is really kind of a focus of ours, is not only to get the money back for you, but to also kind of remove you from the process as much as humanly possible, so that you can focus on things like growing your business and figuring out your staffing and figuring out your agencies. All of those things are forward thinking in your business rather than trying to go back in the past and fix the problems Amazon has. Comes up quite a bit in our conversations with clients.
Yeah, I see that a lot. And for the people that are watching this, we made a list for all the things that you need to pay attention to, and where we see in our experience the areas where sellers go wrong all the time. So what Nathan said of like bookkeeping is super important. And Nathan, I would like to, if you can elaborate a little bit more, the difference, because what I feel is that nobody pays attention to bookkeeping or anything that needs to go to, financials or, accounting or anything like that until the next year when they need to pay taxes. So there is no processes, or there is no a habit of let's revisit this every month. Like, what is that you recommend for sellers? Because obviously there is a service for that take care of it, but at the same time, that doesn't necessarily take you the whole, I'll say the whole ownership of dealing with that information. And that's why you mentioned, like, I need to make the decisions on my business based on the data that I have. And what is the data that you'll be looking at every month? And how do you think sellers will need to start treating that in order to make better decisions in their business?
Yeah, so let me kind of give a quick background story. So when I started selling on Amazon, first of all, I started doing QuickBooks myself. Every single month, I would spend 10 to 15 hours. I would do it in QuickBooks. And what ended up happening was it would pull me away from my business. So my business would suffer. And then I wasn't a bookkeeper, so I had to just get someone else to redo it at the end of the year. Then I said, hey, what if I hire some college kids? They're cheap. I'll have them do the QuickBooks every single month, so I don't have to. That's great. I get to focus on my business. But again, they didn't really know QuickBooks, and I just had to pay for someone else to redo it. On top of that, I wasn't able to make good monthly decisions. So my next step actually was just wait till the end of the year, not touch my bookkeeping at all, dump it on my CPA. He would do it by April and file my taxes, so I wouldn't be late on my taxes. But again, I couldn't make decisions every single month. Then I said, you know what, I'm going to hire a bookkeeper that knows e-commerce, but I don't want to pay for it every single month. So I'm just going to have them do it every single quarter. And while it did help me more than me doing it myself or hiring someone that doesn't know what they're doing, making decisions once a quarter just wasn't good enough to actually make decisions and know what's going on in my business. So by the time I figured out that you needed monthly bookkeeping, we were starting another company, FreeUp, and we hired a bookkeeper from day one. And we created a good monthly bookkeeping process. For every time the month would end, by the 10th to the 15th, we would get an income statement, balance sheet, cash flow. We would have a meeting on our calendars on the 15th of every single month, a monthly finance meeting. If you go to ecombalance.com/agenda, you can grab the exact thing that we go through, that we've gone through every single month for the last 6 years. And that meeting is where you make all decisions for your business. You're not just waking up on a random Tuesday and saying, hey, I'm going to hire this person, or hey, I'm going to drop this agency, or whatever it is. All your decisions are based in that meeting after you actually get the books. And there are some other benefits to just having clean books, like if you need funding or investments, or you're going to sell your business, you can pass due diligence. But the main reason to have monthly bookkeeping is all about that decision-making process. And you should be comparing this month to the previous month and this month to the same month last year. And you should be going line by line. Is my payroll going up? Is my profit margin trending down? And really being able to see where your business is going, what the trends are, and that's where you make decisions on. And that's been the biggest difference, not to mention leading to less stress during tax time and all those benefits. But it's all about making those decisions every single month and being able to look at your revenue, at your different sales channels, at your expenses, at your margins, and then making decisions accordingly.
I love it. I think everything you said is gold, and that ties really well to what Lee was saying before of like the business owner. Like, we as entrepreneurs don't need to be doing every single aspect of our business. Like, you for sure are wasting your time trying to do bookkeeping, and also trying to cut, corners and say like, oh, let me hire a BA and they can do it for cheaper. And I've been guilty of that. One time I said like, you know what, I'm gonna hire somebody to do my bookkeeping, and that's it. And I pay $80 to do my whole bookkeeping for a year. And then when I turned to my accountant, my CPA, he laughed at me. He's like, are you joking? So those things cost me more money, and in reality it costs more money for us, because the time we invest, the thing we pay, and at the end of the day, we will be paying more taxes, right? If it's not done correctly. And on top of that, if you can compare line by line what's going well or wrong, that's what Lee said of like, you hire a tool, you hire a service, and you can really know if the ROI is there or not, right? Like, are these guys doing a good job or not? So you can compare that, and how impactful are those services to your profitability? Because that's the other part we sometimes don't know of, like, is this really moving the needle for my business? Sometimes there are redundancies. Sometimes we really need those services. And the other question that I got was, how do you understand the numbers, right? Like, when you go and look for all those little pieces of data, right? What if my payroll, it's up or down? What are the things if my cost for goods, like the product, is more? Like, when you look for that, how you make sure that you're making the right decision? What is the thing, or what are the trends that you look to see, like, okay, if my cost is going up for the past 3 months, then I should raise my price. Or this is spiking up, should I move something in my business? Should I drop this 3PL? Like, what are the things in your business where you're gonna say like, okay, this is the number and this is the metric that I'm watching out for, and then it's where I make the decision? Or is it something more like, let's see how it goes? Like, it also depends sometimes in your goals, right?
Yeah, I mean, to answer your first question, so as an entrepreneur, you don't need to learn how to use QuickBooks. Like, taking a course on how to be a bookkeeper, that's a complete waste of your time. What you do need to know as an entrepreneur is how to read an income statement, a balance sheet, and a cash flow statement. This is going to help you in your own business. It's going to help you if you invest in businesses. For those of you that go and invest money in the stock market, it's going to help you there as well. And I mean, there's really two ways to get good at it. There's a million resources out there that show you how to read those 3 reports. Or if you're looking at them every single month, that's how you're going to get good at it. You're going to get to know your business. You're going to get to know the different line items. You're going to get to know new line items that get added on. Let's say that you hire Lee, and all of a sudden refunds is a line item in there that you're going to be able to factor in. So the best way to get good at reading those statements is to go through them every single month with your business partner, with your team leaders. And it's tough to answer like, hey, your profit margin should be this, or your expenses should be this. It's very industry specific. It's marketplace specific. It's business specific. But if you have historical data on your business and you've got books going back years, you should be able to know, hey, in December, this is the sales I'm going to. Hey, this is what my margins are overall. And when things start to go in the other direction, you can can fix them and make adjustments, or at least try different things out to get those margins back up before you just get to the end of the quarter or the end of the year and realize you had a bad year or a bad quarter.
Yeah. And Lee, for you on the profitability side, and what are the things that normally go wrong with clients that get to engage with seller investigators, and what do you see in the everyday of sellers? Where are the main areas where they leak money and you're like, yeah, this is a loss and you should pay attention to this? And what are the recommendations for optimizing that, besides obviously using the service or hiring you guys to make the reimbursement process? But in the long term, what are the things that they can do better in like make a decision today and improve for the future?
Sure. So, I mean, the first part of your question, I would say that the best thing that we see is the more systematized the business is, the more successful it is. And I think Nathan would probably say the same thing, right? The platform is becoming increasingly more complex. There are bigger and bigger players coming into pretty much every category. Those people are coming in with professional resources. And if you're out there kind of, guessing, it gets really hard, right? We tell people, when you're dealing with refunds, it's really important. Amazon, because of the way you ship inventory into a 3P center or a warehouse, an Amazon warehouse, they take delivery of it because you ship it into their warehouse. But as everybody here probably knows, they pay you when they sell it. And so technically they don't really take delivery of it. It's still on your books. And so the problems that we see start from when Amazon first counts your inventory when it comes in the warehouse, all the way until it's out the door, the customer has received it, and they were maybe, say, dissatisfied with it for whatever reason, and they ask for a refund. And that entire journey of your inventory is where we live. And it's a complex issue dealing with a business that has a lot of volume in it, because there's so many individual sales and so many individual shipments and so many just things coming and going in between one warehouse that ships it out to 5. Just the complexity of that grows exponentially as your business scales. And what we tell people is, if you can create a standard operating procedure or an SOP, where when you ship product into Amazon in bulk for your business, you need to keep the documentation about how you shipped it. The invoices, the shipping documents, the proof of delivery, whatever documentation you have, you should create a repository on a computer in your systems. It doesn't have to be super complex, but the more complex it is, the easier to be query for it. But you need to have that paperwork. We can look back 9 months on missing inbound shipments, and that's traditionally where we need documentation. So we can go back as far as 9 months looking for problems. The issue then comes up that FedEx and UPS and a lot of other carriers that one might use only keep documents on their platform for 3 months, because they can't keep up with it forever, because there's the scale of how much data that represents. So if you're not keeping track of that data internally, and you sign up for our service, and then you ask me to go and file a case that's 6 months old, and you can't produce the documentation, unfortunately, more often than not, that's a case that just goes, we can't help. So we try to encourage people to understand that, you need to keep some documentation around your inbound shipments. That's paramount for us having as much success for you as possible.
Yeah, and that ties to everything that you guys are saying. Basically, what you're saying is that data is the most important asset of our business. Because if we don't have the data, if we don't have the documents, we don't have the numbers, we cannot look and compare with past months or planning for the future, we're basically will fail. And that's the big thing of profitability, is that in some cases, yes, there are external factors and external things that move in the world, right, that we cannot control and make our business shift. It becomes more expensive, like shipping. Obviously, we cannot plan for a pandemic to happen, of course, but there are some things that we can control. And with those things is that part of like having a clean system or process to gather this data. to have the documents for the shipping, to understand our bookkeeping part, like to say what is each line accounting for and how we can compare it to make better decisions. And at the beginning, I said something that we have a list. So when we were coming up with the content for the webinar, we came up with a list of areas that we think sellers need to start paying more attention to. And I didn't finish mentioning that. The first one obviously was the one of bookkeeping, right? Like, and Nathan covered a bunch of it. The second one is accounting, and that's the part that is different. And I don't know, Nathan, if you can tell us the difference of that, but the difference between bookkeeping and accounting and, you know, CFO. Some people say like, oh, I need to, you know, hire a fractal CFO, a chief financial officer, to make decisions for me or to help me to make decisions. But that's the other area. Then optimize shipping. And we have done, this ties to what Lee was saying of like, guys, if you don't have the information and you're not optimized for on your daily processes, sending inventory to FBA, you're failing there. So we're gonna go upstream of saying like, we're optimizing for shipping, having all the documents, but also making sure that those things are properly or designed for success. And with that, SoStock has an amazing tool. It's for free. If you go to SoStock/tools, you're gonna find it. It's the shipping calculator. So what basically that helps you is to, when you send things in bulk, in a pallet, or even in small parcels and cartons, it will tell you how big the carton should be, so you can fit within, you know, the limitations that Amazon has, obviously, what is the best configuration for boxes, so you can spend the less amount of money in shipping, right? So that's where we optimize for shipping. We have the documentations in case something goes wrong and we need to file a case, but also we are optimizing for shipping, right? We have the best and more efficient way to ship. That's something that we see, or I see every time I go into an account. I see that most sellers default for the status quo or the box, right? The box that they can buy in, you know, UPS or Home Depot. It's like, give me the biggest box, and they start filling in things. But is it that the best way to send inventory to Amazon? That sometimes, and the tool, SoStock tool, prove that most times it's not. Then the fourth one are the discrepancies in FBA fees. And this is hugely, I know you can touch a little bit more on that. The FBA fees sometimes change, right? We send inventory for something that we think is small, and for some reason, Amazon puts it in the extra large tier of FBA fees. And we don't even know that happened. So that's why we have tools and we have services that help with that, because we cannot be on top of our business all the time. We shouldn't be in the business, right? And the last one are remembering that the sellers don't need to do everything themselves. So evaluating where is that you're spending the most amount of time a month. So as you, Nathan, said in your stories, like you were spending between 10 and 15 hours doing the books for your business, right? Is that really efficient? Probably not. So when you compare the value of your hours, right, to the value of a tool or a service that could do that for you, then you see like, okay, this is worth to do it, right? So those are the 5 things that we had. And I don't know, Lee, if you can touch on the discrepancies.
Yeah, sorry about that. I had a power surge, so I've been scrambling for a couple of minutes. Tell me, sorry, I dropped off there.
No worries. We were talking about the FBA fees discrepancies. You know that sometimes sellers send something that is small, but Amazon for some reason put it in the extra large tier of FBA, and they have weird charges, and that's not public. And that's the worst part about as an Amazon seller. There are not a lot of transparency in that way with Amazon, right? If you're not really looking and trying to find where the money is leaking, Amazon is not telling you like, hey, by the way, like you sent this, it was small, but then we put an extra large and you're losing here, I don't know, 20% of the value of that item. So I don't know if you can talk more about that.
Yeah, I mean, it's a major problem. I mean, I say a major problem. It reflects sort of like our business does, 1%. But it's a massive leak point for many sellers. Essentially, to your point, Amazon, the way that it works is if you're in an ASIN and there are multiple people in the ASIN, if somebody ships in a product that has got a different weight and dimension, Amazon, and let's say it's bigger, Amazon will by default make everybody in that category go up to that size. If Amazon measures it incorrectly for whatever reason, everybody goes up in that size. If Amazon just arbitrarily does it, everybody goes up in size. Sometimes there's no rhyme or reason to it. Even if you own a category, this happens periodically. You need to be looking at that. And, you know, Nathan mentioned earlier about all the different things you need to be looking at. We built a weights and dimensions tool that we give to clients for free that is on our dashboard that basically when we ingest from, when you become a client, we ingest some sales reports. Of those sales reports, we're able to ingest your weights and dimensions that Amazon has on file. And then once you want to, you know, if you go into our tool, you can look and see where there are discrepancies based on what you have in your systems. And this effect, and so you can then, you know, you can change it on our site. And then anytime there's a change, if you input your actual weights and dimensions, anytime there's a discrepancy, it'll flag it, send you an email, and, you know, file cases. But it's important to realize that Amazon only lets you go back 90 days to get dollars back. But the biggest problem is that on a go forward basis, you have more errors in your account. We were talking earlier about being efficient and, you know, being organized. If your weights and dimensions are incorrect, when your shipment first arrives at Amazon, and I mentioned earlier that, you know, we manage your inventory from when it hits the warehouse until it goes out the door to a seller, or excuse me, to a consumer. The weights and dimensions tool starts at the door when they accept delivery of your product. So this is a little kind of trick that a lot of people don't realize. Amazon doesn't physically count your inventory. They weigh and measure it based on the box and the dimensions and the weight that they have on file. So if that weight is incorrect, they're automatically going to start with errors in your account. And then as you go along, you're overpaying for warehouse fees, you're overpaying for shipping fees, you're overpaying across the board. So it has a domino effect. It starts when it lands in the, you know, as inventory in the warehouse, and then it stacks up. So we really encourage people on our platform to use this free tool. It, you know, you can get back some money, and certainly it can be used for that. But you should really think about it more as a way to clean up your account, because once you put in the weights and dimensions, they, you know, if they don't change on your system, our system will automatically update you anytime it happens.
Yeah, I love that. Actually, I didn't know the way that it was checking. I thought they were actually counting the thing of, like, you know,
yeah, I mean, the hard part is, yeah, but if you, and I totally, and that's what people think. But if you think about it, how many tractor trailers come into an Amazon distribution center every day? And, you know, how many of them have iPhone cases that, you know, weigh, you know, or are small, like thousands and tens of thousands, and potentially more than that, you know, hundreds of thousands, I don't know, millions of things a day going to the warehouse. They would have more errors if they manually counted it. So yeah, they, you know, they're doing what they can, but if they're working with data that is not accurate, to Nathan's point earlier about having data that's in real time, if the data in real time is not accurate, and by that I mean the weights and dimensions, it's impossible for them to make accurate decisions from Amazon, which in turn hurts your business.
Yeah, I like to think that this was the major realization for me in the space this year, was that the game turned to be like in 2015, and we touched a little bit on that. It's like, yeah, we found a product, there was an inefficiency in the market, there was demand but no offer, we go in and we're super successful. And right now I believe that the sellers that will stay successful and they will keep growing in the platform will be the ones that are optimizing for those inefficiencies internally in their business. And that is extremely on point, Lee, because what you said tied to, we need to go upstream, right? Fixing the problem after happen, like requesting the reimbursement from Amazon, or, you know, opening a case is what you do after it already happened. But what if we can prevent this? And part of the thing of the FBA discrepancies is what I mentioned of, like, most sellers are not, or are just falling for the default. It's like, oh yeah, I'm gonna send it like this. But are you really optimizing for that? And one thing that I really like, and I've seen some sellers doing it since last year actually, was changing the packaging of their product to make it more compact, smaller, right? Because that will give you the climate pledge seller badge, which is, this thing that Amazon have for eco-friendly packaging and stuff like that. Plus, you're winning a bunch by having smaller packaging that can have more units in the same box. Therefore, you're saving in shipping and you're saving so many things. And I've seen how sellers sometimes when they create shipping, it's like, yeah, whatever, pick whatever dimensions. When that gets to the FBA warehouse, they will know what to do, right? They will do a qubit scan, and that's a major red flag and major fall for you on what you just said. Like, not having those dimensions will really impact the long-term profitability of your business.
Yeah, I mean, there's no way for your business to be as organized as, say, Amazon. They're just going to be much bigger. But Amazon's got a term where they try very hard not to ship air, i.e. everything that they do, they consolidate as much as humanly possible. They're trying to overpack trucks. They're trying to overpack planes. They're trying to overpack boxes. They're trying to do, ship with as few packing peanuts and bubble wrap as humanly possible, because as you make it smaller, you're using less material, which is good for the environment and the planet. But from Amazon's perspective, they're not being charged for the shipping as much, and they're saving money. And you should think about it in that context within your own business. It is important to think about efficiencies because there are almost always efficiencies to be gleaned. And, sometimes they aren't worth it. I mean, I understand that, to save 30 cents and to drive yourself crazy and to spend $25,000 may not be a strategic business decision you want to make, but you should at least know what the options are so that you can be informed. I mean, again, to kind of go back to what Nathan was saying earlier with the bookkeeping, if you're making decisions, let's say it's March. Well, let's take April as an example. It's April 20th. Well, if you don't do your books until April 15th, you could go an entire year without knowing there's leakage in your business. And so, by keeping bookkeeping, that's an example of how Nathan can make things more efficient. From our perspective, it's, getting and making sure the weights and dimensions are accurate so that, on a go forward basis, we actually technically will have less business to help you with. So that's somewhat bad for our business. But we believe that if we can make your business more efficient and more profitable, you'll stay with us and you'll realize that we're doing the right thing for you, whether, we make money on it or not. So, a big emphasis of ours is to try and educate people so that they can be better at running their businesses.
100%. And you kind of answered the last question before we jump into the questions that the audience have. But what do you think, guys? And Nathan, you can start with this. What are the levers that sellers can pull when margins start shrinking? What should we do first?
Yeah, real quick, I just want to answer a question that you brought up before to kind of so people understand accounting. Accounting is kind of the overall, everything falls under accounting. And most business owners break that down into 3 parts. So you've got the monthly bookkeeper, and it's their job to get you data to help you make decisions and make tax time less stressful and all the stuff we talked about. Then you've got your CPA, or if you're in a different country, it could be called something else, but you have a tax person, and that they're important because they're going to help you decide whether you should be doing cash or accrual, or whether you should be an S Corp or a C Corp. Making money is great, but you also want to be able to minimize your taxes, and you want a legal, good way to do that. So having a CPA is incredibly important. And by dividing and conquering, you get 2 different brains working together to help get you the best data and the best tax plan for your business. And then that third piece that a lot of people bring in once they get to that $5, $8, $10 million mark is that CFO. That could be a full-time CFO, outsourced, part-time, whatever it is. And it's their job to help you make decisions, to help you project out and forecast. With e-commerce sellers, you have a lot of a lot of situations that are seasonal where you could run out of cash. There are a lot of profitable e-commerce businesses that go out of business because they just run out of cash. So having a CFO helps you make those decisions and helps you plan. But those are kind of three separate parts that fall under the accounting industry. And if you're looking on like levers to pull, obviously having the right type of entity, doing cash or accrual, minimizing taxes, that's obviously important. Being able to make decisions on expenses, what softwares you're using, what service providers you're using, that's incredibly important. And obviously top line, what marketplaces you're selling on, how you can decrease the cost of goods, whether it's shipping or suppliers or whatever it is, that's really where you focus on.
I love it.
Yeah, I mean, I would say, and this is not really about our business. I mean, I'd love to have people come in and, you know, be a part of our business and let us help you. That would be great. But as a seller, it's difficult when you're small and you're getting started, or maybe you're doing, I mean, you know, $1 million to some people is a lot. Some people it's not a lot, depending on the scale of your business and the people involved in it. But if you can remove yourself as the entrepreneur from as many decisions as possible, you can scale the business. There just runs out of hours in the day. And you know, you need to research and hire the right people to help you do your business. It's pretty much impossible at this point to run Amazon, a profitable Amazon store, without having some consulting help. It's just there are too many pieces to be doing it properly in all aspects. So, you know, I think about it, what can I do today that allows me to be more efficient tomorrow? Like building a better mousetrap. So rather than working in the business, work on it. So in other words, think about, you know, in the future, if I had a bookkeeper and, you know, that person was doing these things efficiently for me, that would allow me to then tackle these next set of problems. And then if I'm tackling those problems, I can then tackle the next set of problems. And, you know, we try very hard in our business to be a provider that you can set and forget, so to speak. And, you know, if you can find some people like that to really help your business grow and get out of the minutia of every decision, knowing that you have people behind you that are doing the right thing, that's really where I think you can scale your business. Because absent of that, you just run out of hours in the day.
Yeah, totally. That's the biggest and most important asset we have. And for sure that goes into profitability. We are just running out of hours every single day because we're doing the small things, then we're not growing and then we're not profitable. And sometimes I believe that entrepreneurs fall into that trap of like, oh, if I do it, it will be cheaper, right? Which it's not true.
We get that a lot, you know, people trying to do it in-house as an example. And we say, okay, well, that's great. But, you know, our business, we get paid when we're successful. So our service is free, except if we're actually get money back for you. So let's say you take a client, you know, ABC, and they're doing it in-house and they're getting back, you know, some amount of money. That typically what we see is that represents like 40 or 50% of what you're probably available getting back. Because it's the complexity, if you don't have to tie into the API, which is too expensive to build for an individual business, it's just really hard, whether you're doing it with a cheap VA or an inexpensive VA, or whether you're doing it with onshore labor. And, you know, that person's going to ultimately wear multiple hats. They're just not going to be super great at it. So you think, oh, you know, I got back X amount of dollars. I feel good about it. But you don't realize that there was 2X available to you. We find that a lot, like a lot. I mean, I have examples sitting here on my desk that, you know, if I have time, I can run through, where we had clients that were either working with competitors or doing it internally. And we found, you know, in some cases, tens of thousands of dollars, and in some cases, hundreds of thousands of dollars. It's important to audit the auditors, if you will, right? I mean, in my case, because you never know how good a job somebody is doing. It's not unlike when we were talking earlier about having somebody do your books and then have your CPA do them again because you didn't do it right. In our case, you know, we love to run free audits for people to show them, hey, look, whatever system you're doing, whether you're doing it in-house or whether you're doing it with a competitor, let us run a free audit and let us show you. More often than not, we find quite a bit of errors that are going on in your system. And, you know, after 9 months, you lose the right to go after them. So, you know, being smart about the way you spend your time and the way you think about vendors and whatnot is really important.
I love it. And thank you so much, guys, for those amazing insights. I think we have a bunch of information about what can sellers do to increase those numbers, the areas that they need to start looking at, because there are sometimes neglected